ಒಂದು ಸಂಸ್ಥೆಯ ಈಕ್ವಿಟಿ ಷೇರುದಾರ ಆ ಸಂಸ್ಥೆಯ ನಿಜವಾದ ಮಾಲೀಕ. ತನ್ನ ಬಳಿ ಇರುವ ಒಟ್ಟು ಷೇರಿನ ಮೌಲ್ಯವನ್ನು ಸಂಸ್ಥೆಯ ಒಟ್ಟು ಮೌಲ್ಯದ ಜೊತೆಗೆ ಲೆಕ್ಕಾಚಾರ ಮಾಡಿದಾಗ ಎಷ್ಟು ಪ್ರತಿಶತ ಬರುತ್ತೋ ಅಷ್ಟು ಪ್ರತಿಶತದ ಪಾಲುದಾರ. ಸಂಸ್ಥೆಯ ನಿಜವಾದ ಲಾಭ ನಷ್ಟದಲ್ಲಿ ಪಾಲ್ಗೊಳ್ಳುವವನೇ ನಿಜವಾದ ಹೂಡಿಕೆದಾರ. ಇದೇ ಮಾತನ್ನು ನಾವು ಬೇರೆ ಯಾವುದೇ ರೂಪದಲ್ಲಿ ಹಣ ಹೂಡಿದವರ ಬಗ್ಗೆ ಹೇಳಲು ಬಾರದು. ಏಕೆಂದರೆ ಅವರೆಲ್ಲ ಸಂಸ್ಥೆ ಲಾಭ ಮಾಡಲಿ ಅಥವಾ ನಷ್ಟ ಮಾಡಿಕೊಳ್ಳಿ, ಅದರ ಜೊತೆಗೆ ಕೊನೆಯ ತನಕ ಹೆಜ್ಜೆ ಹಾಕುತ್ತೇವೆ ಅಂತ ಬಂದವರಲ್ಲ. ಈಕ್ವಿಟಿ ಷೇರುದಾರ ಮಾತ್ರ ಅಪಾಯಕ್ಕೆ ಮುಖವೊಡ್ಡಿ ನಿಂತಿರ್ತಾರೆ. ಸಹಜವಾಗಿ ಇವರಿಗೆ ಬೇರೆಯವರಿಗಿಂತ ಒಂದಷ್ಟು ಹೆಚ್ಚಿನ ಹಕ್ಕುಗಳು ಮತ್ತು ಬಾಧ್ಯತೆಗಳು ಇರುತ್ತೆ. ಹಾಗಾಗಿ ಇವತ್ತು ಈಕ್ವಿಟಿಲಿ ಹೂಡಿಕೆ ಮಾಡಿರೋರು ಯಾರೇ ಇದ್ರೂ ಮಾರ್ಕೆಟ್ನಲ್ಲಿ ಒಂದು ಏರಿಳಿತಗಳು ಅತ್ಯಂತ ಹೆಚ್ಚಿರುತ್ತೆ. ಯಾವುದೇ ಕಾರಣಕ್ಕೂ ಪ್ಯಾನಿಕ್ಗೆ ಒಳಗಾಗದೆ ಸ್ಥಿರವಾದ ಮನಸ್ಸಿಟ್ಟುಕೊಂಡಿದ್ದಲ್ಲಿ ಲಾಭನ ನಾವು ಬುಕ್ ಮಾಡ್ಕೋಬೋದು. ಯಾಕೆ ಅಂತಂದರೆ ಸದ್ಯದಲ್ಲೇ ಕೇಂದ್ರ ಸರ್ಕಾರದ ಚುನಾವಣೆ ಕೂಡ ಇದೆ. ಹಾಗಾಗಿ ನಮ್ಮ ಮಾರ್ಕೆಟು ಅಪ್ಬೀಟ್ ಆಗಿ ಇದ್ದೇ ಇರುತ್ತೆ. ಧನ್ಯವಾದ.
The trading theme revolves around Nifty regularly scaling new all-time highs despite hawkish Fed and overbought technical conditions. Should investors be afraid of market's record heights? In yesterday's trade, Nifty slipped hard after scaling new all-time high of 22,249.40. Blame it to massive profit booking. That brings us to the big question, has benchmark Nifty gone too high, too fast? Honestly speaking, the sentiments at our stock markets are still rattled on backdrop of global inflation and growth concerns, which act as the biggest macro headwinds. Digging deeper, inflation is still above RBI's target, interest rates are still high and many market participants still do not feel great about the economy. And please note, the geopolitical situation is a worrisome, unstable mess. And yet despite headwinds, record all-time highs continue to be the new normal for benchmark Nifty. On the face of it, it appears that the market is completely divorced from reality. But, having said that, there are two good reasons for stocks to be surging. 1. Hopes that the Federal Reserve can engineer a soft landing. 2. Well, Street is anticipating a strong popular mandate for the ruling party BJP in the upcoming 2024 Lok Sabha polls. Bottom line, for the day, it's prudent to watch patiently as volatility is likely to be the hallmark on backdrop of. The RBI will also release its policy meeting minutes on Thursday, 22nd February. Long story short, the Gyan Mantra is to stay cautious and stay nimble. Global cues are mostly negative. In yesterday's negative session, FIIs were net buyers to the tune of Rs 285 crores. DIIs however sold to the tune of Rs 412 crores. Market bread for the day is likely to be neutral. Sentiment is likely to be risky. Nifty's technical suggesting bearish engulfing candlestick pattern amidst overbought technical conditions. F&O data suggests the likely trading range for Nifty is likely to be between 21,500 to 23,000 zone. India VIX continues to trade firm at 15.92 levels. Nifty PCR 22nd Feb is at 0.72. Nifty PCR 29th February is at 1. Bank Nifty PCR 29th February is at 1. Nifty's outlook for the day, and a pan-down session is quite likely. Nifty CMP to 2055. Support 21,839 by 21,530. Resistance 22,300 by 22,751. Range 21,850 to 22,200. Bias neutral. Bank Nifty CMP 470 to 0. Support 46,367 by 45,750. Resistance 47,500 by 48,636. Range 46,500 to 47,500. Bias neutral. The breaking news, the FOMC minutes suggests that more evidence needed to certify that inflation is trending lower before they budge on interest rates. The Fed officials do not expect rates to go any higher this economic cycle, but they aren't ready to cut. Furthermore, the economic outlook was firmer than the December projections. This morning, rising Middle East geopolitical uncertainty is tempting Nifty bulls to succumb to pessimism. The Pentagon has ordered a second carrier strike group to the eastern Mediterranean Sea and is sending Air Force fighter jets to the region as Israel prepares to expand its Middle East operations. Meanwhile, the government has said the state-owned Coal India is likely to exceed its capex target of 16,500 crore rupees for the current financial year. Coal India accounts for over 80% of domestic coal output. The stock price of steel companies, Tata Steel, JSW Steel and Jindal Steel and Power, are in limelight following the rise in coking coal prices. See, entertainment stock price is receiving fresh drubbing on a Bloomberg report that SEBI has found about rupees 2,000 crore fund diversion.